We saw that PPI come in at the weakest level in 4 years, that CPI also coming in weaker than expected. So what's your reaction here? What's the big surprise?
Sure, this is a very good question. Good morning, everyone. I think the key message from the latest the CPI and the PPI numbers in China is that the bigger risk in China is not about inflation, but instead it's the deflation and is the bigger risk. PPI in particular, which is mainly a reflection of the weaker demand, both domestically as well as in the global demand as well. And CPI is still above 3%, but it's trending lower. So that what that really means is that the PBOC now have more room to basically step up the easing going forward.
Right. When it comes to stepping up that easing, we have China's National People's Congress coming up next week. We are not expecting a numerical target. So what are you watching for?
Okay, the two things I'm watching for. And firstly, even without a numeric GDP growth target, what's the tone of the policy goals, particularly in terms of the growth, in terms of the employment jobs? That will give you a sense in terms of how much catch up in terms of stimulus the government will do in the months ahead. So whether they're going to have a much lower but more realistic kind of a range of the GDP growth like 2 to 3%, or just simply drop off completely the number. That still make a difference in terms of the magnitude of the stimulus going forward. Secondly, is that what sort of specific new stimulus they're going to be announced. Particularly on the fiscal policy front, there's already a lot of talks about the special treasury bond. When they're going to issue that, what's the magnitude, where they're going to use that money, where they're going to spend that money, and secondly, on the local government special bond issues, so how much they allow local government to issue in terms of local government debt. So all those matters in terms of the how big the support, the policy support is going to be to facilitate the economic rebound in the coming quarters in China.
Hongbin, tell us a bit more about how these numbers, the PPI numbers in particular, actually will affect GDP looking ahead. And on top of that, you're changing your forecast for growth as well, as you just alluded to.
Yes, I think what we have been seeing, including today's number, is that the post lockdown recovery in China so far has turned out to be slower than most people initially expected. We already basically in 1.5 months into after this kind of the first lifting of the lockdown. And then if you look at this, the most kind of spending numbers, particular retail sales, even the investment spendings, that has not yet fully recovered. We're talking about probably the recovery to probably something like 60% or 80% of the pre-crisis kind of normal level. So what that really means is that we are going to the recovering process is actually facing pretty stronger than expected headwinds, both on the domestic front as well as on the global front. So which means that we're going to see continue to see a slow recovery, at least in the coming months. Not purely because of a global slump, but also some kind of domestic kind of headwinds as well.